market then, and let's firstly tell you what sort of a handover that we are getting to see from the US market. So firstly, with respect to the US, we have seen that just yesterday it was a bit of a decline coming in for all the benchmark indices, wherein Dow Jones did decline almost 0.2%, S&P 500 also nosedived, while Nasdaq did decline over 1.5%. But as of now, if you look at the futures, very strong rally is what we are getting to see, and that's after Amazon shares post-market has seen a jump of almost 13% in the extended trading hours, and that is something that is giving the booster to the markets. Not just the Nasdaq futures are higher by over 1%, but along with that, we are getting to see that even Dow Jones futures are also seen to be having a gains of almost 100 odd points. Now, in terms of some of the other earnings and the reactions to that, it was the tech drag Meta that tanked almost 11%. Microsoft did dip 3%. Despite a strong cloud numbers, and Alphabet did seem to be gaining almost 2.5% on the back of an upbeat and AI revenues. But Netflix was also in focus as the company did announce the stock split for 10:1. Now, along with that, we have seen that, yes, of course, the market is seen to be digesting the fact that the Trump and Xi meeting is now over, the FOMC meet is in the place, and now earnings is something that the markets will react sharply to. So all in all, a decent day coming in for the US markets, but good rally is what we are getting to see when it comes to the futures. Kanishka.
Absolutely. So that's about the US markets, but let's also put the spotlight on the commodity market and how the moves were over there. The oil prices, they remain under pressure this week. Brent crude is trading near that $64 a barrel mark, whereas WTI, that's hovering close to $60, both heading for a third straight monthly loss. Now, the weakness, remember, comes ahead of the OPEC Plus meeting this weekend, where producers are expected to approve another hike, that is a supply hike of about 137,000 barrels per day. In fact, markets are worried about a global supply glut, especially after the IEA has warned of a record surplus in 2026. Sanctions on Russian producers like Rosneft, Neft and Lukoil, they've also added to some uncertainty, whereas the Indian refiners have paused Russian imports. Now, despite the recent US-China trade truce, oil traders remain cautious as the demand outlook that stays weak. But if we also talk about the yellow metal, prices are holding steady over there after a sharp rebound. Spot gold is trading above that $4,000 an ounce level, consolidating gains from earlier this week. Now, traders are weighing the impact of US-China truce. However, expectations of fewer Fed rate cuts and ETF outflows, they are capping further upside. But remember, gold has already surged 50% this year, supported by central bank buying and investor demand for safety. So yes, overall, Srishti, oil remains weak on oversupply fears, whereas gold continues to glitter as safe haven demand continues.
All right, so that's about US markets as well as the gold and crude movement. But moving on to some of the other stories then, and China says it's willing to work with the US to properly resolve the issues over TikTok.